What's up, YouTube? We are back at it again with a jam-packed video full of information on the trade that I took this morning on Hood. We decided to go short to the downside, meaning we got some puts and betted that the stock was going to continue to the downside. And that's the beautiful thing about options trading is you can trade up to the upside or you can trade down to the downside. So this morning we saw the overall market was showing weakness and we decided to go for shorts. So this is the 4-hour time frame. As you can see, we have two levels here at the 104.50 and another level here at the 102. So I was waiting for either or to break first. So on the bigger time frames, I was waiting for it to break above 104.50, come back and retest for the entry and continue to the upside, or break below 102 and then wait for the retest to continue to the downside. As you can see, I have the arrows here set up for you guys so you guys can have a visual of what I was looking at. So now we can go to the 1-hour time frame and we can see that this red candle here closed below our structure level of 102. As you can see, it was previous support. Every time it touched that level, it bounced. Every time it touched that level, it bounced. So there was two confirmations there, and as soon as we broke under it, we are looking for sells. Now, this is the bigger time frames giving us that overall direction of where the stock is headed. So since we broke under that level, we are looking for sells. The strategy that I use every single day to make an extra income in the stock market is called the break and retest strategy. But I usually trade the lower time frames, which is the 5-minute time frame. So we go down to the 5-minute time frame and we can see that again we are showing weakness. We are showing a clear downtrend to the downside. Now we are below that level, and so we're looking for sells. We also have to mark our pre-market lows and our pre-market highs. Our pre-market highs are way up here at 104. We're not really worried about the stock going up to that level because we are showing weakness in the overall market. So we mark our pre-market low level here, and now we wait for the market to open and see what it does, see how it reacts. And as soon as market opened, we saw a massive red candle here to the downside, and that's when we started seeing and preparing ourselves for looking for puts or looking for sells to continue the trend to the downside. So we can see we bounced here at the 98 level and we continued to retrace back to pre-market lows. As soon as we got to pre-market lows, we started entering position here at that wick of the pre-market low. It was testing VWAP and the 9 EMA. That's when we started entering position as soon as we started tapping into those levels. We did come back down and we closed our candle here around 99.35. Now we were green there. We were actually positive. We were actually in profit. But I wanted to see another red candle continue to the downside, and we did not get that. We got a nice green candle back to the upside. And since we were still below pre-market low, I held my position. I did not sell. We were technically at break even at that level. And the candle just continued to go to the upside. As you can see, the next 5-minute candle broke through pre-market low and we closed above pre-market low. So technically on the break and retest strategy of the 5-minute time frame, I was supposed to stop out at that level. This was my exit entry of this trade, right here. As soon as this candle closed above pre-market low, I was supposed to stop out and take my loss. Now I'm going to explain to you guys why I did not stop out and I held my position during this drawdown. You know, a lot of things were going in my head, a lot of emotions, but I wasn't really too worried because again, I didn't go so heavy at this position that whatever loss I was taking at this very moment, it wasn't really affecting my overall portfolio. It wasn't hurting me in any type of way. So I held my position and I started to analyze and go back to the bigger time frames. Now, once I go to the 1-hour time frame, I can see that we also needed a retracement, a higher low. We needed to create a higher low on the bigger time frames. So on this 1-hour time frame, it started turning green on me to come back and test this 102 level. And so I realized that we are under 102. It's supposed to be testing 102 for a rejection, because now we are acting as resistance. We are also testing the 9 EMA on the 1 hour time frame. I'm going to double down my position if we can see any type of rejection or any type of downward action with the cells that are coming in, because we're getting a nice higher low trend here. So going back to the 5-minute time frame, we can see that as soon as we got to that 102 level, which is here, right at this circle up here, I decided to double down once this red candle started coming in. We started seeing cells coming in, and I decided to double down my position, which brought my my average down to about there, and I put my stop loss right above 102. As soon as we get a candle closure above 102, then I will most definitely stop out. The next 5-minute candle decides to come back up, rejects again, and turns red and continues back to the downside. So I saw the 5-minute time frames continuing down. I held my position. We are now green in our trade. That's when I knew. I went back to the 1 hour time frames. We were creating that higher low, retesting 102. So I was feeling that much more confident with my position. I was feeling that much more confident with my trade. And I did double down. So now I was up about $2,000, about $2,500 into this position. And I was willing to lose about 10%, maybe even 15% on this trade to make that 10 to 15% profit. But in all reality, I was supposed to go for a 1 to 2. This was a 1.3, 1 to a 1.3. Not the greatest risk to reward. I did sell really, really early, but as soon as I saw that it was breaking below pre-market low, it was breaking under 100, it tapped in to about 99.75. That's when I decided to opt out of my trade. Yep, 99.75. I decided to get out of my trade for a nice 14% return on investment. So I made about $238 this morning trading hood puts to the downside. Now, my target was here at the 99 level and potentially go all the way down here to this 98 level, 98 wick fill that I would have loved for it to fill. But unfortunately, we didn't get there. It started to bounce off this 99 zone. We took our trade. We exited our position as soon as we saw that we were up about 10 to 15% profit, and we called it a day. It was a beautiful trade. Nothing too crazy, not the greatest risk to reward again, because we want to go at least a minimum of 1 to 2, because that's how you stay profitable. That's how you stay long-term in this game. But we took a 1 to 1.3, nothing crazy. We stayed green for the day. The trade played out perfectly on the higher time frames, which is the 1 hour time frame. It came to retest our level. We trusted our levels that we can have a rejection at that zone, and we perfectly did. So we had to double down and take our trade, take our position, take our profits. And yeah, it was a beautiful day. It's only Tuesday. Great way to start September with some nice profits. And tomorrow's a new day. So we'll see how it goes. But this was our trade here on hood puts to the downside. I hope you guys can pick up some great value from what I just showed you guys on my trade. And if you guys have any questions, I will put the link below on my Instagram. You can always DM me. And please don't be afraid to share, like, subscribe my YouTube channel. I would greatly appreciate it. I'm going to continue posting some value on this channel about trading the stock market, so you guys can continue learning this skill